Hey guys, Brian Pintar here with your weekly market update. Today is Friday, the December 15th. The mortgage-backed security market has moved 422 basis points in under the last 45 days. That is the fastest movement. And by the way, when 422 for the better means interest rates are going down or should be going down. That's the fastest movement since the housing collapse of 2008, when the Fed started tanking rates in order to save the economy. And then, if you remember back then, that's where we ended up with quantitative easing. So to see that naturally over under 45 days is massive. However, it is not fully reflected in rates yet. It's not even close. And there's two main reasons. One is banks are taking profits after 18 months of horrible returns, so they got to make some money back. And two is what a lot of people don't realize is when mortgage banks are selling money on the secondary market as mortgage backed securities, they're hedging against the market. So when we see a massive rise or a massive increase in values in mortgage backed securities, it's impossible to hedge because you don't know where the price is going to be. And the other things that people don't realize is when you lock in an interest rate, the mortgage company is not actually locking that rate. So any variable, any change between when that rate is locked and when that loan is delivered on the secondary market could be a profit or a loss to the mortgage bank. So because we've seen so much movement in a short period of time, banks aren't able to hedge. So that's not reflected in the price yet. So once we see some stability in the mortgage-backed securities market, even a couple days of losses would actually help stabilize. We're going to see interest rates fall, and we're going to see them fall really quickly. Another thing that came out in the email below is back in it was originally in June 12th, which would be the Fed meeting in June 12th of 2024. There's an 89% chance that the Fed was going to drop interest rates. Now, in March of 2024, there's a 84% chance the Fed's going to drop interest rates. And then in May, there's a 100% chance, and there's an 80% chance they'll drop at 50 basis points. And in June, there's a 100% chance the Fed's going to drop rates. And there's an 81% chance that rate's going to be 75 basis points. And there's a 100% chance they're going to drop rates in the Fed meetings in July, September, November, and December of next year. So, anyways, the Fed's going to start dropping rates. Why does this matter so much? Because if you are a home buyer or you know home buyers, the market is going to be flooded. So every 1% drop in interest rates, 5 million renters become eligible to buy a house. Why does that matter so much? Because there's not nearly enough inventory to cover that. In fact, last year, if we look back at some of the data here, right now we figure there's on average there's 700,000 homes available in the market. And if the interest rates drop 2%, there's going to be about 38 million buyers for 700,000 homes. So what that means is you're going to have extremely competitive buying situations back just like it was in 2021. The average days on market is going to be 2-3 days. You're going to have to waive appraisal. You have to waive appraisals, so you're going to have to pay appraisal gaps. You're going to have to waive inspection. You're going to have to buy houses sight unseen. It's going to become extremely difficult for home buyers. So, anyways, that's where we're going. If you have any questions, call me. I'm always here for you. If you want any explanations on hedging on the secondary market, where I get the data from, I'm always available for you. I hope you have a great day. Call me if you need anything. Thanks. Bye.